We have a huge update for all stock market investors today. CPI is out, better than expected. Bank earnings are blowing away the expectations. Fed speakers are confirming that maybe we are making progress on inflation, that it won't be as big of an issue as we expect. We do have big data coming out tomorrow, big earnings tomorrow morning that could be important for Nvidia and other AI names, as well as a possible TikTok ban coming on Sunday, which now looks very likely. Ladies and gentlemen, we have everything you need to know about our markets today, what could be coming next, and what's going to be happening tomorrow, because we do have some retail sales data as well, and a new GDP estimate. I will share the latest and the details with you in this video. But before we get into that, let's start with your CPI data today. Core month over month came in at 0.2% versus expectations of 0.3%. So that beat, and that's a big difference, right? 0.3% times 12 is 3.6% on a 12-month kind of annualized basis. At 0.2%, that's 2.4% on a 12-month annualized basis. There's actually a big difference in just that 0.1% beat today. Core year over year came in at 3.2% versus expectations of 3.3%, so that's better than expected. Headline inflation month over month came in at 0.4%. That actually was higher than expected at 0.3%. And year over year headline came in at 2.9%, and that met expectations. That is up from 2.7% though last month. So core is what everyone cares about, and that came in better than expected. That is really a sigh of relief when markets have been very nervous about inflation in recent weeks. You could see today 10-year treasury yields are down 11.5 basis points, back down to 4.67%. Now, we've recently went up a lot. From December 5th, you were at 4.15%, 4.15%. So you're still up 50 basis points in a little over a month, even after today's drop. But today's drop was definitely welcomed by markets. You can also see today the VIX is down about 9.5%, which is definitely another sigh of relief. It's still elevated, almost at 17, but still progress in the right direction since we have been so bearish the last couple of weeks. The Russell 2000 is up 1.64%, NASDAQ is up 1.75%, S&P is up 1.31%, and the Dow is up 1.3%. So pretty even gains across the board. You also have super core CPI up 0.21% month over month in December, down from 0.34% in November. So this was a nice drop on a month over month basis. Okay, so even if you look at super core, inflation is making progress. Fed Williams said today, I see the move to 2% inflation over the coming years. And Fed Kashkari says tariffs themselves don't cause inflation, but tit for tat retaliation is more complicated. So look at that. The Fed's already kind of walking back the whole tariffs could cause inflation argument. Traders are now pricing in a Fed rate cut by July versus September, previous to this CPI data. Fed Williams says the government's policy outlook is the main source of uncertainty. Fed Williams also says that disinflation process to continue, but could be choppy. And then he also says, I expect the unemployment rate to hold between 4 and 4.25%. He also says that monetary policy is well positioned for economic outlook. Now, some people on Wall Street, like Jeremy Schwartz here, says that markets are cheering inflation news, but it is even better than reported. Plugging in more real-time data on Shelter, headline inflation improves from 2.9% to 1.8%. Core inflation improves from 3.2% to 1.9%. Alt inflation metrics off their lows, but still below the Fed's 2% target. And this is basically just looking at the current market rents versus the way the CPI is calculated in the government numbers, which is owner equivalent rents, basically surveying homeowners, asking them what they could rent their homes for. You know, I don't think that's a very accurate way of getting a housing inflation number to begin with, but hey, it is what it is. It just takes longer for homeowners to realize they cannot charge insane amounts if they want to rent out their home. Fed Barkin says today the latest CPI suggests inflation is still declining, and Fed Barkin as well says inflation is coming down towards the 2% target. Now, also in the news today is big bank earnings. Goldman Sachs was one of the standout bank earnings today. The revenue came in at $13.87 billion versus estimates of $12.37 billion. So that was a big beat. But look at this EPS number. Came in at $11.95 versus estimates of $8.17. That's a big beat. Goldman Sachs CEO Solomon also says that there has been a meaningful shift in CEO confidence since Trump's election. He also said, quote, additionally, there is a significant backlog from sponsors and an overall increased appetite for deal making supported by an improving regulatory backdrop. And also in the news today, Israel, Hamas have agreed to a ceasefire and a hostage deal. This is according to NBC News. Now, I think the markets are well past this psychologically. I don't think this is a catalyst at this point, but it is good news. JP Morgan also had great earnings today. They posted a record profit as the bank's massive scale pays off. It says here profit rose 50% to $14 billion in the quarter as non-interest expenses fell 7% from a year earlier. You have EPS at $8 or $4.81 versus $4.11 as was the estimate, and revenue at $43.74 billion versus $41.73 billion expected. That was a big beat on revenue as well. CEO Jamie Dimon said in the release that the economy was, quote, resilient, buoyed by low unemployment and a healthy consumer spending, as well as optimism for the Trump administration's pro-growth agenda. However, two significant risks remain, Dimon said. Ongoing and future spending requirements will likely be inflationary, and therefore inflation may persist for some time. Additionally, geopolitical conditions remain the most dangerous and complicated since World War II. As always, we hope for the best, but prepare the firm for a wide range of scenarios. Now, tomorrow morning, we have earnings from TSMC. TSMC does virtually all of the contract manufacturing for NVIDIA's GPUs. If TSMC has good earnings, that is a good sign for NVIDIA. If they have bad earnings, that's a bad sign for NVIDIA. And it's about as simple as that. So I think TSMC packs more than just its own personal weight when they report earnings tomorrow morning. United Health Group, Bank of America, Morgan Stanley, U.S. Bank Corp, First Horizon, PNC, and M&T Bank will also report tomorrow morning. J.B. Hunt, Bank of Ozark, and RF Industries report tomorrow in after hours. And SLB, Regions, Fastenal, Truist, State Street, Citizens, and Independent Bank report Friday pre-market. So far, we are seeing a strong earnings season from big banks. Coming tomorrow morning, we will get retail sales month over month. We are expecting positive 0.6%. This is, kind of one of those weird things where a low number may be seen as good news and a high number may be seen as bad news. Ultimately, in my opinion, you want to see a strong economy, so the higher the better. I really don't think there's like a too high number personally, but if we did get a really high number tomorrow, Wall Street may not like that, and stocks would probably come under some pressure. Now, we will also get export prices month over month and import prices month over month. That does feed into GDP estimates, in which we'll get another GDP estimate coming tomorrow from the Atlanta Fed GDP Now tracker. And current estimates for GDP, if this page is going to load, are sitting at 2.7%. So, We'll see what happens coming tomorrow morning. You see the next GDP Now update is Thursday, January 16th. That is tomorrow. The last update we had was January 9th. So retail sales, export prices, and import prices are going to affect a new GDP update. Now, initial jobless claims are expected at 210,000 tomorrow. You get Philadelphia Fed Manufacturing Index, expecting that's going to come in at around -5. So that would be quite an improvement from last month's -16.4. Continuing jobless claims, Philly Fed business conditions, CapEx index, employment, new orders, and prices paid. Prices paid will be the most watched component of this because that is supply chain managers and their expectations for prices over the next couple of months. You will get business inventories month over month and the NAHB Housing Market Index that will also be coming out tomorrow. On Friday, we get building permits and housing starts. So tomorrow is really the last day of big data for this week. And tomorrow is going to drive what is probably the move into Friday as well. That said, it may feel like we have seen a lot of progress now today and even yesterday to a certain extent, but the CNN Fear and Greed Index is still only at 28, which is barely out of extreme fear. So you're pretty close to being extremely fearful still, and not a whole lot has actually changed. Now, the percent of stocks trading above their 50-day moving average has definitely gotten a little bit better, now sitting at about 35%, meaning 65% of stocks are currently trading below their 50-day moving average. So still, a majority of the markets are currently in an active decline, and that's one reason why I think there's still a lot more room for markets to move higher from here. You also have the AI Investor Sentiment Survey, as I've went over with you guys plenty of times now, at 34.7% of investors that are bullish, neutral investors at 28.0%, and bearish investors at 37.4%. Fed Goolsbee says the CPI report is somewhat encouraging and somewhat discouraging in equal measure. I mean, I don't really know what's discouraging in this. If you look at Supercore, if you look at shelter inflation, I mean, they're all making progress. But again, you could say the headline CPI report is discouraging if you include energy and food prices, which the Fed is really not supposed to do because they're so volatile. Fed Goolsbee says for the last 6 months, PCE inflation has run close to the 2% target. He also says that he is optimistic for 2025 on a soft landing, and he says that he still sees continued progress on inflation. Fed Williams also says that he is optimistic about U.S. productivity outlook. He says a wild card for neutral rate view is much higher levels of debt, and higher government debt may have lifted the neutral rate estimates. And last but not least, for anyone that is concerned, TikTok is preparing for the U.S. Sunday shutdown, sources tell Reuters, and not just that you won't be able to download the app, but people attempting to open the app will see a pop-up message directing them to a website with information about the ban, the sources said, requesting anonymity as the matter is not public. So even if you already have downloaded TikTok, you will not be able to use it coming Sunday. Now, pretty much everyone believes that Trump is just going to unban TikTok to the extent that he can, and it will come back online shortly. But, of course, we do not know that. Now, if we take a look at the S&P, we gapped up today above our 20-day moving average, but finding resistance at the 50-day moving average. 50-day moving average, look at that. You literally found resistance right at that level. That is almost at $593 per share. It's $592.89. And you're finding support here on the 20-day moving average at $590.96. Tesla stocks currently sandwiched in the middle, $591.76. I think tomorrow's data will firmly break us out to the upside, in my personal opinion, out of this range and allow us to move higher. But if it doesn't, then we have a bigger problem. If we fall lower again, that's not going to be great. We are developing what looks like a pretty clean channel here. And I would really be watching these levels as well on the the downside and on the upside. This trend line to the downside suggests we could soon be in the 570s again if markets, do not hold this strength, or we could be finding some resistance here again at about 596 or so. If we break above that, then a run to new all-time highs would then look likely, in my opinion. So, ladies and gentlemen, that is going to go ahead and do it for this video. That is everything you need to know and some of what you didn't need to know. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.